Quick disclaimer. Because the information on this podcast is based on our own personal opinions and experiences, it should not be considered professional financial investment advice. The ideas and strategies should never be used without first assessing your own personal and financial situation or without consulting a financial professional. Our thoughts and opinions will also change from time to time as we learn and accumulate more knowledge. All views are our own. Enjoy the episode.
Welcome back to Bearish, everyone, the podcast where we talk about stocks just for college kids. Quick updates before the episode actually starts. We're going to be switching up the format from now on. We're going to be doing two different types of episodes. This type of episode is just going to be our regular everyday podcast. And then we're going to introduce a second episode where we actually talk about more current events, stuff that's actually happening in the stock market at that current time. Okay, so that's our quick updates. I'll go ahead and hand it off to Logan.
You're joking. You're joking.
Jared's been okay. I'll take over this now because you guys have been so.
You've been atrocious, Jared. You've been so bad.
For those of you listening, Jared has not been able to get his stuff together for the past hour. We've been trying to record this episode for an hour, and every single time he makes us crack, and it's been awful. Like, we've been trying to sit down and get this done, and he just can't hold it together.
Can you guys see my tears?
Dude,
can you see my eyes?
It's either been this or it's been just stiff as.
Yeah.
This is what a stock is today, or it's this. Like,
Okay, all right.
just find a middle ground, buddy.
That's
We're
so
keeping
funny.
going. I'm not doing this again. All right.
Yeah.
Today we're gonna
We're
be
not
talking
doing
about
this
three
again,
main
guys.
topics.
It's playing.
It's gonna be exactly what is a stock, what is the stock market, and how do you get into investing, and what platforms do we use to do that? So our first one, what exactly is a stock? Jared, why don't you take it away?
Let's get it.
All right. A stock. I'm not reading off the script. We have a script. We're not reading off it. We did that for an hour. Didn't work. A stock is a share of a business that you can buy. Simple, plain and simple. That's it. It's a share of a business that you can buy on the stock market.
Yep, right.
Max?
And when you buy that, you technically own a percentage of that company. So we're going to make it very, very simple for you guys. We have the world-renowned pencil company.
The pencil.
Everybody recognizes this. Everybody. You know what this thing is. It's valuable, right? So I buy, this is a share of pencil company. I buy this one share. I buy this share for $5. Mr. Jared over here says, you know what? There's a lot of hype around this pencil company. I think it's worth something. It starts creeping its way up. Boom. Pencil, this one share, is worth $10. Now, I think it's not going any higher. I say, you know what? Let me get rid of it. I don't want anything to do with this pencil company anymore. I say, you know what, Jared? Here you go. Take it away. This thing is yours. I sell it to him then. This share is now Jared's, and it is now worth $10. I profit $5 from this trade. Bought it for $5, sold it for $10, and boom. I walk away happy with $5. Jared walks away happy with his one share of pencil company. That's it.
Yeah. So when you buy shares of stock, it all depends on what you think it's worth, right? So Max thought it was worth $5. I thought it was worth $10. Max is happy to sell it to me at $10 because he doesn't think it's worth $10. Or maybe he does, but he doesn't think it's worth any more than that. I may think it's worth way more than $10. So Max is happy to sell me his share. I'm happy to buy the share. So you're doing business with the person. You're doing business with another investor. You're doing business with other people on the stock market. It's investor to investor. So when you buy a share of a stock, obviously you want the price to increase, right?
Correct.
But people don't realize how that works. It's like supply and demand. I don't know if Max mentioned it. I think he might have. But when the demand of a company is high, more people will pay more for it because they think it's worth more than what it is. For it to go from $5 to $10, people before me had to buy it at more than $5 to drive the price up.
Exactly.
So that's really what it is. And it's the complete opposite if the price is going down. If the demand for a certain company is low, people are going to start buying it lower, and then they're going to start buying it lower.
Exactly.
And lower and lower, and then that's when the stock price goes down.
We can take it to, say there's a concert coming out, and is a lot of hype around this concert. You know, he just came out with a new album. and tickets are getting less and less. They started at 1,000 tickets for this venue, and now they're getting less and less. That price of that ticket, we can think of it as a share, is going to blow up. Now, say a couple days before the concert, he drops a song, and it is whack. That stock or that concert ticket will most likely drop way more than what it used to be. That's a pretty stupid version of what a stock can and can't do, why the price rises, why it doesn't, supply and demand, hype around it, news, good press, bad press, whatever it may be.
Let's give it a real world example. So Tesla, for example, that thing has been rallying for literally forever, it seems like. So like Max said, news is good if it's good news, if that makes, I mean, obviously.
Elon Musk can do
so
whatever
with Tesla,
he wants, pretty much.
Yeah, Elon Musk, at the recording of this episode, he's now the richest person in the world. Right. He overtook Jeff Bezos today. So Tesla has their earnings day, and they blow their earnings out of the f***ing water. They destroy what analysts thought they were going to do. Obviously, it's going to go up. It's really it. That's really it. It's going to go up unless they say something in the earnings call. And an earnings call is every quarter. The CEO of a certain company has to report their financials. They have to. If you're a publicly traded company, which means you're on the stock market, people can buy and sell your shares. If you're a publicly traded company on the stock market, you have to report your financials every quarter. And a quarter it's 3 months. Right?
Yeah, every 3 months.
Yeah,
because there's 4 of them.
So every 3 months is a quarter.
Yeah, exactly. And he mentioned a publicly traded company. This is all of the companies that me, you, and all the other investors around us on our little brokerages. For example, I use Robinhood. We use Robinhood. This is what all of us can trade. All of these publicly traded companies is what they're called. So that will get us into basically where does a stock begin or where does a share begin. So this will go into the primary and the secondary markets. A primary market is basically a company says, you know what, let's just use Apple as an example. A company says, we want to go public. We want people to invest in us and basically raise funds, raise capital for our company. And investors, big time banks, all these big heads will pour money into this company and say, you know what, I really believe in what you're doing. I am buying into your whole scheme, your business scheme, and we will pour in money. So Apple says, you know what, we think our shares are worth $20. For their IPO is going to be $20. IPO is initial public offering. They say, you know what, we think ours are worth $20. The big banks and big investors, they'll pour in this money, and that will raise funds for the business. Then once these banks grab a hold of it, they will sell it to these fund managers and us, the investors. So that's how the banks make their money. That's how the corporations make their money. So it's a big line. It's basically just a streamlined service of where these shares are going. That is the primary market, the IPO coming from the corporations to the banks. Now, the secondary market is where us as investors will buy, sell, and what they call trade these shares on the open market, such as Robinhood.
Right. Ooh, my bad, boys.
One
That's
term,
exactly right.
Yeah.
Sorry, what were you going to say? Huh?
I was going to say, I don't think we've talked about outstanding shares and exactly what that term means.
Okay, yeah. So we'll get to outstanding shares. I just wanted to piggyback off Max for a second about the primary and secondary markets. I want to reiterate, us, typical investors, do not trade on the primary market. That is not us. Those are the big investment banks. Those are the big institutions. They pretty much appraise the company, which means they give an estimation of what they think that business is worth.
Correct.
Right. Okay. So we just to get it out of the way, don't even think about that. We do not trade on the primary market.
Exactly.
Investor to investor is on the secondary market. That is what we do.
Right. And personally, Jared brought this up the other day, and I didn't even know what a primary versus secondary market is. That is because, quite frankly, it doesn't really matter what the hell a primary and secondary market is to us, because we are only trading on the only market that we know, which is the secondary market. We just kind of want to give a background of information of where does this stock begin and where does it end. It starts with these businesses, these corporations filing for an IPO, and it ends with us trading it amongst other people like us. That's basically it.
It's not
Yeah,
it's
and
not
so-
need to know info. It's just info that it's just background information that we wanted to make sure you guys were aware of.
Exactly.
Everyone trades at our level on the exact same market, the secondary market. So this information isn't vital. It's not like you need to know which market you need to trade on. It's all the same for all of us.
Correct.
Yeah. A big reason why I wanted to bring it up is because you never see a video talking about a primary, secondary market, do you? Never.
Not one that breaks it down
I've
that
never
easily.
seen a video.
Exactly. It is fairly simple. It was confusing at first because I didn't even know if I traded in it, but hey, what do you know? We don't even touch it. It doesn't really matter to us, but it is good to know for background information.
Yeah, we've been investing, or we've been interested in trading stocks for over a year now, and we literally just found out about this.
Last
So
night.
it does not really matter. It does not matter. It's just good to know. It's good knowledge. So now we're gonna get to what Logan mentioned: outstanding shares. So when a company is going public, they want to raise a certain amount of money so they can invest in themselves, invest in their operations, grow their company, maybe buy out another company through an acquisition. They tell these investment banks that they want to raise a certain amount of money through this IPO, through this initial public offering. The investment banks then, they give their appraisal on what they think their shares are worth, what they will be willing to buy their shares for. And this is where outstanding shares comes in. So once an IPO has begun and then ended, after that, it's strictly investor to investor. Apple, for example, does not see any of that money when it's us trading.
Right.
Now the way Apple gets all this money is because I don't know how much they like initially wanted to raise because it was so long ago, and we're not really talking about like Apple's actual IPO. We're just using them as an example because everyone knows them, everyone uses their products.
Yeah, their IPO was not $20. I don't know what it is. It was just an example.
I actually have it.
Yeah.
I have it pulled up here. Apple actually went public in December 12th of 1980 at $22 per share.
Oh shit, we were close.
Yeah, I pulled that one out of my
shit.
ass. There we go. Look at that.
It's actually
I wasn't
guys,
born yet, but sick.
This is fascinating. They actually put it on their actual website. Like they have a history of their stock. Like what was Apple's IPO? It's called investor.apple.com. I think this is cool. I haven't seen this on other company websites before.
Does it say
And
what
how
they're
much
at
are they
right
worth
now?
today? Yeah, exactly.
Yeah, I can pull that up in another tab.
There you go,
Apple stock.
Right. So you have the outstanding shares, and what is talked about a lot in the world of investing is market capitalization. It's
Guys.
abbreviated as market cap. Go ahead.
They're going up. We were just talking about it a little bit earlier, but they went from 130 to 131 now. And they're climbing up 3.68%.
So 6 times what their initial stock started at.
About,
Going
yeah.
up.
And I'm sure they've done stock splits as well.
A little
For
bit
anyone,
less.
Yeah, Apple
just
has some
listening,
stock splits.
A stock split
Yeah.
is basically
But-
where they split the amount of stocks they have into some kind of multiplicative factor. So if they have 10 stocks right now and they did a 5-to-1 split, they would then have 50 stocks, which allows more people to get invested, more people to buy those stocks. And it decreases the dollar amount per share that each share is worth. But overall, it keeps the same value. So if you had 1 share and they split it, you now have 5 shares that are each worth a little bit less, but overall they're the same amount.
Yeah, like if you had one
Yeah.
share,
Like-
one share at $5, and then they decided to do a split into 5 shares, each share would be worth $1 because each of those shares added up equals $5, the same
Right,
amount as before
exactly.
the split.
Exactly.
Right. It's and it's not worth any more or any less. Imagine going to a bank, you have $5 and you exchange it for 5 $1 bills.
Exactly.
It's the same exact thing. A company will do that when they get like really high in price, because not all people, not all investors are able to buy shares of stock at $200, $300, $400.
Right.
So they'll decrease their price to make it more enticing for smaller investors to buy in, thus raising their market cap, which we're going to get into. And market capitalization is what's known as a market cap as well. It's pretty much what the company is worth on the open market according to the stock market. Apple, in this case, Apple is worth $2.23 trillion. And how you get that number, you multiply the share price, which is what Michael said, $131, by the number of outstanding shares. Now, the number of outstanding shares is how many shares Apple has available for investors, me, you, hedge fund managers, for us to buy.
Exactly.
That's all it is.
And so
that's all. It's just the amount of shares that are available for purchase.
Going back to Handy Dandy Pencil Company, this is a single share. This is a single outstanding share.
Max loves his pencils.
I love it. This is a single outstanding share of all of the amount, 17 million or whatever it was for Apple. But this is a single one
Apple,
of those outstanding shares.
Yeah. For Apple, they have 17.1 billion shares available for the open market for the people on the stock market to purchase, buy, sell, trade, whatever.
Right. And if you take up and buy one of those shares, it is one of the 17 billion outstanding shares. Right.
Mm-hmm.
Back to what you were saying.
Yeah, right.
What was I saying?
You were talking about
the pencil.
Yeah, you didn't
Oh,
finish
that's
your
the
pencil
market
analysis.
That was the market cap. I was just I was trying to give a visual representation of what one of these outstanding shares was exactly, and that's how you make up the market cap. It's the price of one of or all of these.
No.
It's the price of one of these multiplied by how many there are. There you go.
We're new to this, guys.
Yeah. We're learning.
No, but that's exactly right.
And
So
it just gives you
Apple's market cap right now? I think it's number one. We just looked it up about an hour ago. It is the highest market cap.
I'll look
correct?
at it right now.
I think it was 2.3 trillion.
You don't even have to look it up. It's 2.23 trillion.
That's their
trillion dollars,
which is insane.
So that is literally the number of shares that they have for the public market to buy, sell, trade, etc., times whatever cost one share is. So I think they're 131 right now. So you take that price, multiply it by the 17.1 billion shares that they have, and that's how you get market cap.
And just
market cap will
to
change daily.
Just to give you a sense of scale, comparing Apple to other companies, I'm pulling up the most valuable companies right now, and in comparison to all the other companies in 2020, like the most recent quarter, this is Wikipedia. Take it with a grain of salt. They use citations. Apple has the highest market cap at 2.2 trillion. There's only about 4 companies, and they're all the big tech companies: Apple, Microsoft, Amazon, and Alphabet, which is Google's parent company, that are actually above the trillion market cap. It's crazy.
Correct.
Like, there's not that many companies.
And he said big tech, which is also partly known as what is called FANG. So this is Facebook, Apple, Amazon, Netflix, and Google. Those are basically really big drivers of the market as a whole, aka big tech, aka some of the biggest market caps in the whole entire world of investing.
Yeah, so Apple, with their $2.23 trillion market cap, it's crazy. They're the most valuable company in the world. That's what that means. They are worth the most on the stock market, which is nuts. It's nuts.
Right. And we keep on saying the market. What exactly is the market? We're just going to take a step back. It is where you can buy, sell, aka trade, the shares of whatever company that is publicly traded. So there's 3 big indexes, which is the Dow, the S&P 500, and the NASDAQ. These are basically what will be referred to as, when you look on like CNBC and all these newscasts, these are what they're going to be showing you. They're the biggest indexes in the market, and each one of them holds different kinds of stocks, such as like in different sectors like technology, or S&P is the 500 biggest stocks or companies out there. But they're basically they're what show the health of the market. Is the market up today? Are we feeling good? Are we feeling bad? What exactly is going on in the world of economics?
Is that why they group it like that, in order to show like a general picture of a certain group of stocks? Because I Yeah, it's a screenshot. Okay, so if it's a screenshot, that makes sense because I never understood when I was first looking at those things. I hear it all the time on the news. I always hear NASDAQ. I hear S&P 500. I'm like, what the heck are they talking about? These weird acronyms. NYSE. I know that's New York Stock Exchange. I learned that recently. But that's always confused me. So thank you for clarifying that. That's been one of the things that's confused me the most.
Yeah, I think it's literally just an indicator. Those are like the indicators for how the market as a whole are doing, basically.
Yeah, right.
So when people talk about the market's up like 500 points, et cetera, that's what they're talking about is that exact one, NASDAQ, S&P 500, stuff like that. Because it's an indicator for the market as a whole.
Yeah, Jared last episode talked about, remember when you said that you were at the market and you said the Dow dropped, you were at Costco with your mom, you said the Dow dropped 2,300 points.
Yes.
It's a perfect example of things that I hear on a daily, or used to hear on a daily before I learned about it. And now it kind of makes sense to me.
So like Max said, they all represent different things. The NASDAQ are the tech stocks, Apple, Amazon, Netflix, Google, Facebook, blah, 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 etc. The S&P 500, it stands for the Standard & Poor's 500.
Standard and what?
500 large.
I didn't hear that last part.
Poor's, or poor.
Poor? Okay.
Check me on that. Is it Poor's or poor?
I'm not sure. I don't even know what word you're saying, to be honest.
To be honest, I didn't
P-O-R-R.
know what it stood for either.
Whoops.
I just know what it indicates.
Yeah. Keep going, Jared. I'll look it up while you're finishing.
Standard
So
and Poor's 500.
Yeah. So the NASDAQ is tech companies. S&P are the 500. That's why it's called the S&P 500. 500 largest companies on the stock market. And the Dow Jones, I think, is made up of the top 30 companies on this. I don't know if it's the top 30, but it's 30 companies. That's what the Dow Jones is made up of.
Right. And he said the NASDAQ is made up of tech stocks of like Facebook and Apple. So I'm going to just use those two. Say Facebook goes up. I'm saying, hypothetically, say the NASDAQ was made up of just those two stocks. So say Facebook goes up 10 points or $10 and Apple goes up $5. So technically for that day, the NASDAQ would be up 15 points is what they would say. So it's just kind of like an adding up, subtracting of all the stocks in there. And then whatever number comes out is the sum of all of the movements of those stocks within that index.
Yeah, I just looked it up. The NASDAQ, I actually did not know this either. And this isn't information that you need to know. I mean, it's good to know what indexes there are. Like we said, Dow Jones, NASDAQ, S&P. But we're just giving you like bonus information. There's 3,300 stocks in the NASDAQ.
That's a lot.
I did not know
I
that.
didn't know that either.
Wow.
Did not know that.
It's actually kind of ridiculous.
I wonder how they decide how you get in there. Like, what's the criteria for getting into the NASDAQ?
Well, Tesla just moved from the NASDAQ to the S&P, correct? Or they're about to. They're soon to.
I'm not sure.
And that has been big time news, and that could be why damn Tesla's shooting to the moon right now. But there could be a lot of other reasons. We don't know what's going on there.
Let's pull it back to the basics, what we were talking about. Let's go back on topic.
Right. So
Max kind of had a perfect segue into our second topic, which is what is the stock market, and he's already started talking about that, which is perfect. We've basically already covered everything that we had to talk about in that topic. So unless you guys had more to add about the market.
Well, we had a question of where do I buy a stock? And I thought that was pretty interesting because you don't just go into Google and say, buy a share of Apple. It doesn't work like that. So basically, there's a lot of different what's called brokerages. These are platforms that you can log into, put your personal information in, and that's where you're able to funnel in money and buy and trade these stocks. Personally, we all use Robinhood. It makes it very seamless and easy to navigate. The graphs are dumbed down to the extreme. They have red and green indicators, which makes it perfect to see your up or down on the day. It makes it really, really simple. You can download the app. It's on like Safari or whatever. You can go on there too. But there's a lot of different ones. There's TD Ameritrade, which is a little bit more advanced, has a little bit more graph technical analysis. Robinhood, Fidelity. There's a lot of different places to do it. But if we had to recommend one, no sponsor, I would say Robinhood. I say Robinhood.
Yeah,
It's just the
Robinhood
one we
is
all
easy.
use. It's the one we all
Yeah,
use. It's really
Robinhood-
straightforward.
Yeah, it makes it super
Robinhood
easy.
is by far.
There's no
Yeah.
premiums. A lot of the reasons that people go to Robinhood is because a bunch of the bigger stockbrokers, like one that my dad maybe used, like Merrill Lynch, they charge money for when you trade a stock, when you trade options, which is a topic for another video, things like that. Whereas Robinhood has a $0 premium on all those things. You can even day trade on Robinhood, which a lot of other places make you pay for, or you have to have a certain amount of money in your bank account before they allow you to.
So
Well, Robinhood, you still have to have a certain amount of money. You have to have
You can only make a certain
25,000 in
amount
order to
of
day
trade.
trade.
It's
Yeah.
like capped at like
Yeah.
5 a week or something like that.
No. If you're below 25,000, you can only make 3 day trades
3.
in a week.
Oops.
Yeah, and yeah, so Robinhood is by far the most simple and probably the best platform to trade on if you're new to this. But we're not giving you like any. We're not going to tell you to go on there. It's just for us, it was by far the easiest to learn.
Correct.
cool.
Definitely.
Yeah.
So we're gonna try something a little bit new. Is it okay if we go ahead and get started with that, guys? With the example
go for
trade.
it.
Okay.
Yeah, I'm not
So
opposed to it.
yeah. So the
To market close.
that too. Yeah. We're gonna do something a little bit different. Max is actually gonna have to turn off his camera because he has to use his phone. But what he's gonna do is he's gonna screen record his phone and he's gonna show him actually making a trade on Robinhood. So if you're watching on YouTube, it'd be great for you to watch and see it. He's also going to explain the heck out of it. So those of you listening just through audio, you can actually walk through it with him. So if you guys, you can pause the podcast here, or you can pause the episode here if you want to, or come back to it later. You can actually walk through a trade with us whenever you're ready. But go ahead, Max, whenever
All
you're
right.
ready.
Let's get this going. Today we are going to be trading Apple. Fingers crossed it goes up, because if it doesn't,
Okay. Are you making sure
Disappointed.
did you screen record?
oh boy, I am. All right, so
good.
we scroll down here, going to Apple. We see that it's trading at $131.45. It just went up. All right, so here we go. We can look at the diagram right here.
Yeah, tell them about the interface, like describe what you can see and everything and what you're clicking
Correct,
on.
yeah. So right here we have the day. This is what it's done from market opens at 9:30. This is all pre-market right here to the left. But then it shows a graphical representation of what it has done throughout the day. As I'm scrolling for the people at home, the price is going up and down based on the graph and the timing of the day. We can go to 1 week, 1 month, 3 months, so on and so forth. Down here it has the biggest news. You just scroll down a little bit. Biggest news of what exactly is going on in regards to maybe tech companies or Apple in specific. Now we are going to trade it. So I go right here to trade options. That is a whole nother beast in itself.
It keeps
We will not
popping up.
touch those.
We're gonna talk.
We'll talk about those, but not at the moment.
For those
So
of you
what
listening, there's a whole backstory to this topic that we will get into in another episode. But for now,
And
let's
boy, does
focus
it make you
on-
money.
All right,
No, I'm
keep
fine.
going, Max.
So
keep going.
we go in the bottom left, you see volume. That's how many times this has been traded in this single day. Right now, it is just shy of 90 million shares that have been traded on the day. Absurd.
insane.
Absolutely absurd.
What's the average?
Top
what's,
left.
What's typical?
I mean, I don't know if he can see it.
I can't.
on Robinhood.
The 50 to market.
I don't
No, it has
think you
market
can.
cap
Not
right
that
here
high.
as well.
Definitely not that high, Mike. I'll say that.
Okay.
For yeah, right. For the average stock, I'll just back out real quick and go to Roku. It's at 7 million, to put a little bit of perspective in there.
Okay.
7 million volume.
And so
Um,
the volume can sort of act like an indicator of how many times
how
or-
many
or
people, how many times it's being
and so
Right.
maybe how popular
Demand
it is,
in a
or
sense.
that it's moving and demand is shifting.
Right.
Right.
The higher the volume, typically the more volatile the stock is. That means
Hold on, Max. You want to check Tesla's volume real quick? That thing shot up today. It went up like
Tesla
40
is 46 million right now today, and it did shoot
Wow.
up
Oh
today.
my
Um,
gosh.
We have the dollar. Going back to Apple, we have the dollar amount. It's gone up $4 since open, $4.80, which is in the percentage term is just shy of 4%. So we're gonna go in to buy this. We're gonna click trade. We're gonna click buy, and right here it says number of shares, market price, which is what it is trading at currently. This is the current price that I can buy it for. And then estimated cost changes based on how many shares I want to buy. So I'll click in 1, and it'll be 1 times the market price. Obviously, it's going to be 131.35. Now, if I'm up in here clicking 2,400 shares, the estimated cost is going to be an absurd amount. We don't have the money for that. So we're going to go back to a single share. So type in a single share. It says order summary. You're placing a good for a day market order to buy 1 share of Apple. That means basically at 4 o'clock, which is when the market closes. If this does not execute, which it will because it's a super high volume, then the order goes away. Then I no longer am buying a share. So it says 1 share, market price of 131.32. I'm going to swipe up to submit this. This means I am now buying it. Order received. Your order to buy Apple has been complete. So I have 1 of 1 shares purchased for an average price of 131.37. I will go up to the top now. And I have lost 0.5 cents. Sick. Nah, but seriously,
Okay.
as this moves up and down, I will lose or gain money. Now I'm plus 3 cents. This is just how it goes. My average cost is always, unless I buy more, this is always going to be 131.37.
Yeah.
Jared, you want to explain how exactly the cost average works? Just a real quick screenshot of if I buy more, the average will move. If I buy, you know what I'm saying?
So Max bought that 1 share at $131 and whatever 37 cents, whatever he said. If the share drops, the share price drops, and Max buys again, that average share price will now decrease to the middle. So you add those 2 up, and then you divide it by 2. How many shares you bought? He's bought 2. Now, if it goes up, you're not really supposed to. I mean, it's all up to you. When the stock price goes up, you don't really want to buy more because then you're already paying more for what you were already originally paying. So say Apple shot up to 140, Max bought another share. His average share amount was now higher than 131 because he bought at a higher price than he originally did.
Exactly. So let's.
It basically just shows you the average of all your purchases for that stock, like what your average buying price for that stock is. So it allows you to see, like let's say your average is 135 and Apple's at 140. It allows you to see, on average, I'm making money in relation to how much I paid for that stock.
Exactly.
And a big reason why Robinhood is so popular and why we keep saying it is because if you're a beginner, like we've said before, it's super, super simple to use that app. Like you just saw Max. He clicked on Apple. He clicked trade. He bought 1 share, and all he did was slide up. That's it. That's all you gotta do is slide up, and you have a piece of Apple. You have a share of Apple.
Yes, technically, I now own a percentage of Apple. Now, what we're gonna do here is we're gonna sell it. I think, you know what? I don't think Apple's going above this anymore. I'm getting out. This stock's crashing. I don't want it. I'm going to click trade again. If I wanted to buy more, I'd click buy. I'm going to sell it though. So I'd click sell. There's an option that just automatic. If I had more than 1 share, I could click that and it would sell every single share that I have. Right here, I'm going to just type in 1 review and then I swipe up again. And looky here, my share is now off to somebody else and out of my hands. I
How much
think
did you
I
make?
lost a whopping 1 cent on that trade, so it's pretty sick. But yeah, it's that simple. It's very, very easy. It's very streamlined, and that's how you trade a stock.
One more thing,
Yep.
I'm not too sure about on Robinhood, but I've seen it. I've just never done it. I think you can buy like dollar amounts of shares, right? Like say Tesla's at like 600, 700 bucks, whatever it's at on the day.
It's at 8 now.
8,
Right.
okay. And then you only have like $200, so you'd never be able to buy 1 stock of Tesla. What Robinhood allows you to do is buy basically, if it's at 800 and you put 200 in, you're buying like a fourth of 1 stock. You can buy like partial stock amounts. So if you want to invest in Tesla but you don't have the money right now to buy a complete stock, then you can do that, and it allows you to do that. So it just gives you a lot of flexibility.
It's fantastic for people like us who may not have a lot of money. If you're a college kid or if you're a teenager, you don't have that much money in the bank, you can still afford to buy like these really big name companies, but it won't be a full stock, but it'll still be part of the stock and you can still profit off of it.
Mm-hmm.
They're called fractional shares is what the term is for it. And like they said, if you don't have enough money to buy a full share, say Tesla, hypothetically, it's at or not hypothetically, it's at 800 right now. I only have enough for $400 worth of it. Then I would buy half a share of Tesla, and if it moved up $1, I would only receive 50 cents of whatever, or a 50 cent profit.
Mm-hmm. Yeah. So piggybacking and circling back to Robinhood, what's cool about them is they kind of pioneered the whole commission-free platform.
Yeah, that was never normal.
Now, Robinhood, right? No, you used to have to pay for every trade you made on other brokerages. On every brokerage, you had to. So with Robinhood, they said, you don't have to pay us for making a trade. We're gonna make it free. So what other brokerages have started doing, TD Ameritrade, like Logan's dad probably does, Merrill Lynch, any other brokerage account or brokerage platform, you used to have to pay a commission for every trade. Now you don't have to. Most of them are completely free because they have to keep up with Robinhood. Mm-hmm. So that's really like cool that Robinhood did that, because it created the domino effect of, all right, well, we have to keep up with them. Let's make it free now.
Make some competition there.
Set the market standard, yeah.
Right. That's basically summed up stocks and the market as a whole.
Yeah. Exactly. So that's stocks, stock markets, and the platforms we use and how you guys can get invested yourself. So, Michael, why don't you run that intro, bro?
Outro. Yeah, outro. Oh, we don't want to do another intro. Oh, hell no.
Please no.
God,
Please don't.
I'm all right.
I'm good. 499 times is enough for me. I'm okay.
Exactly.
All right, let's do the outro. Well, hopefully you guys enjoyed the episode. If you did, leave a like on YouTube if you're watching on YouTube. And don't forget to subscribe and hit the notification bell so you actually get notifications whenever we upload videos. If you're not on YouTube, you're listening on Spotify or Apple Podcasts, make sure you leave a rating. It lets us know that we're listening. And finally, if you want to follow us and you want to start engaging with us, we're on Instagram, Twitter, TikTok, and Discord if you guys want to come on and chat with us, and you can ask us questions, leave a comment on the YouTube video if you want to hear us talk about something else. But yeah, hopefully you guys enjoyed the video, and we'll talk to you guys later. Peace.
See ya.
Later, boys.